So is it 6 p.m.? Can we start?
Yeah, go for it.
Yep. Okay. So hello and welcome everybody to one of the last sessions of today's Scottish Summit. Today we will have a presentation about where's the money, and this will be done by Ievgen and me. But before we get started, let's thank our sponsors because they are the ones that make this event work and help us making this realize. So we have Script Runner, we have DQ Global, Proximo 3, then we have Redspire, Agilicis, and Hitachi Solutions. Okay, so when we were talking about the introduction and preparation of this session, I was asking Ievgen, hey, Ievgen, what is typical about Scotland? Yeah, what are Scottish people look like? Yeah, and we found a couple of icons that I would say everybody outside of Scotland feels how Scottish people are. So a typical stereotype is they are very greedy about money. You keep your money very, very tight, and of course you wear interesting clothes. Yeah. So we thought, hey, why is Dynamics the perfect ERP solution for Scotland? Well, here we came up with some ideas and some answers to this question. Well, first of all, we can quickly answer the question, for what purpose did I spend my money? Then the next thing is, who is responsible for spending the money? So who spent all the money that we collected very tightly and bought maybe some stuff? Then of course we can answer the question, how much money will I spend in the next couple of days, weeks, or months? That's also important, that I know what is going to happen in the future. And finally, the important question is, of course, at the end of the day, will I get poorer or richer? Yeah. And to answer all of these questions, we need, of course, some superheroes, and especially some from Scotland. And let me introduce the first one. And here I hand over to Ievgen.
Hello everyone, my name is Ievgen, and I will be doing technical bits of this wonderful presentation. I'm working as a developer at Fusion 5 New Zealand. Yep. And now go back to our financial guru.
Yeah, thank you. And of course, the other Scottish hero who is born in Edinburgh is this little fellow here on the right-hand side, who will also help us going through the next couple of minutes. So in this presentation, we have a couple of things that we want to highlight. One of the first things is we want to have a forward-looking cash inflow, cash outflow analysis. Yeah? So we want to see what's going on with our cash, looking into the future. Then the second part will look into it will look backwards. Yeah, we'll look on our history. For what purpose did we actually spend the money? And then the last part, which is also kind of cash related. This is if we bought something, yeah, maybe some assets, then the question is, hey, what is happening to my profit and loss? Will I get richer or poorer? Yeah, so we have a kind of cash flow related depreciation forecast that we want to show you before we end up with a question and answer session. But let's get started now. Here with the first part. And this is actually a problem that I had. And of course, I have my mate here, Ievgen, because this is what I saw when I opened the cash flow forecasting form in my demo machine. It is basically based on Power BI, and on my demo machine, I do not have Power BI. So I get this error message, and I ask Ievgen, hey, Ievgen, I see these kind of slides in my customer's application. How can I get something similar? I mean, I need some data. I need at least a date, the amount, whether it's a positive or negative amount, and some information to come up with this data to calculate my cash flow, but how to do that? So can you help me with that?
Yes, of course, Ludwig. It can be done with electronic reporting. Electronic reporting is a very powerful tool. But first of all, we need to figure out where this data is coming from. Yep. So let me take screen over and show you what we can do for you.
Yeah. So I think I have to stop.
No? Can you see it?
Not yet.
And because I can see only my video.
Yes,
awesome. Finally. So here we have LCS. And from LCS, we can get Power BI report we are interested in and actually look how it works. So on the left-hand side here, you can see asset library. You see I have already one report downloaded, but I can actually go and input any standard report and get PBIX file. Yep. So if I will click at it, it will download for me. I already have one downloaded. Now I need a Power BI desktop. All VMs have it pre-installed currently, and it has a database you can connect and look at the report. So I have my report opened. That's our cash flow tab. And here we can see all the values we are interested in. Now we want to know what stands behind. And if you select something, you will see that there is a measurement. And measurement use next set of fields. So now we can know that account name is coming from account name, account number from a number, date from date, and so on and so forth. But that's an aggregated measurement, and we don't really know what sits behind. Is there a table or an entity? There are two ways how to do it. One requires access to Visual Studio. You can go and simply open that measurement. Yep, like you can see here on the screenshot. And there under table property, you can see that it's actually using data entity. Yep. Second option is actually go to Electronic Reporting Designer, look at data sources and try to find something similar that is not that precise and scientific. So now we know that measurement is using data entity, and we can build our report based on this entity. Let me get to the Inferno and show you how it works. So now here, it's a very simple report to extract the data. We will need, as usual, to build a new model, new design, and map everything together. Report layout, we will use Excel because Excel is really powerful to filter data. So here is my template. It's very simple. I have all the fields I need. I have date, company, type, voucher, source of transaction, amount, and currency. And all I need to do is actually to add all those cells and create a couple of name ranges. And that's it. So I need one range per value, name it somehow, and another big range for the table. And that's it. Very simple report. On the second sheet, I can add a pivot table if I want to group or pivot data somehow. And it's really powerful because you cannot do that in Inferno itself. But Excel gives you a huge option. Okay, let's go back to our electronic reporting. So first of all, I want to show you my model. Model again would be super simple. It's just one section of record list, like one line per line of data, and fields I want to report. Same stuff that I have in a template. Amount in local currency, company currency code, and so on and so forth. Now I need to map it back to the data source. And data source here would be entity that we found from a Visual Studio. This entity has all the fields required, like again, and I just simply map it back to my data model. So there's one trick here that is very important. In a data entity, we have an enum, and if you use enum straight ahead, it will return you values that are not user-friendly. So we want to get a nice labels, and this trick is really good documented on the docs. So all you need to do is to actually add enum as a data source here. It has all the values. Then you add another calculated field where you build a list of enum values, and then you can use filter to map a value, not like technical value, back to a nice friendly label. So now we have our model mapped back to a data entity. Let's look at the design of the report before we'll actually run it. And design would be pretty simple as well. So to get it first, you need to import your Excel spreadsheet. It will automatically build a mapping for you with two sheets, and then you just map fields as you want. Yep. And again, it's really simple because we have one line represents one line of data. You just map fields that you have in Excel back to your data model, and that will get data from a data entity in Inferno that has all the calculations. And now let's look at the report itself. When you run it, you have a filter by company. It gives you options. You can look at the forecast for only one company or for all of them. Let's go for all the companies. It's my report. And out of it, you can see date, company. You obviously can filter by company. You can see why, what is the source of the payment, what's the due date, what's the document date, what's the currency, what's the amount. And if you go back to the pivot tab, you can see all the details aggregated by sum and a date. And that's it. Back to you.
Ah, okay. Hey, that's actually very nice. Yeah. So let me try to share my screen again. And then we continue with the next story that we have. And this one is actually about backward-looking cash in and cash outflow. So Yevgen just showed you what will happen in the future. So how much money do I need in the next couple of weeks and months and years maybe? Yeah. What we want to focus now in the next couple of minutes is to look and analyze what we spend the money for. Yeah? And if you know dynamics, then you know that we have a couple of standard forms like the payment history, yeah, or some other voucher transaction forms that actually holds this data. But the problem is that this data is not accessible in a way that allows us to analyze it, and it is limited because it's not available for customers in the same way as it is for vendors. So, but in addition, we have actually a kind of financial reporter. So here I shared you the cash flow standard report, but this one is not a perfect one because it is based on what is called in accounting terms an indirect method. So you do not really see for what purpose you spend your money in your operations. You just see net income and add back non-cash expenses. But I want to see, hey, did I buy some materials? Did I buy a fixed asset? What did I buy? Yeah? So this does not really help us. And therefore we thought, okay, let's try with an electronic report. Yeah? And based on the concept that Yevgen showed you before, we created something similar when we analyze invoice data. So invoices that we paid for vendors. We did not do that for customers because the principle and the way how this can be done is the same. So we focus here on vendor invoices, sorry. And a problem is when you pay an invoice, then you do not pay an individual invoice line. So as an example, you can receive an invoice that includes some operating expense and that includes some capex expenses. So some fixed assets or other parts that need to be grouped in different parts of our cash flow statement. So the problem is really that we do not pay lines. And the question is, how can we answer the question then, for what did we spend the money? Well, the answer is we need to allocate the payments into the different lines. And this can be done with electronic reporting. Yeah. So let me switch to my machine where we have some data recorded and where we have this electronic reporting model configured. And what I will do in the following is I will just record an ordinary vendor invoice and then pay it, so that we can, in the last step, then analyze it and see what we have actually spent the money for. So to get started, I prepared here a vendor invoice in a vendor invoice journal. Yeah? You can use the same approach for purchase order invoices or for invoices that you record in the pending vendor invoice form. So it doesn't really matter where you record it. The only thing is that you record it and pay it later on. So let's have a look at this number here. So this would be an example where you have an expense invoice recorded here as a expense invoice referring to a procurement category. So this is one possibility how we can post it. Another one is, and it's also that something that we prepared, you can create the same in a vendor invoice journal. And here I just prepared a single invoice that is actually a bit complex because it is split across different accounts. It contains different transactions and amounts. Yeah? And we want to see this later on when we analyze the money that we have paid. So this invoice, let's try to record it and pay it then, is for a total of 750. And then we have freight, other expense, and purchase expenses right below. So let's just quickly post this. And then we want to pay it, of course. And if you look carefully, then you can see that we have a cash discount that we can take. And of course, we want to take at least some of that and then see what is the outcome. So now let's go, after recording the invoice, let's go to my invoice journal. Oh, there's something pending here. Let me try to hide this and then go to the vendor payment journal. So here I just create a brand new one. And what I'm doing here is I'm just paying a single invoice, just to keep things as simple as possible. Yeah, the normal way would be to run a payment proposal and then select the invoices. But to keep it as easy as possible, I just select my invoice here at the bottom that I prepared. So the total invoice amount was 750, but we pay a bit less. And let's say instead of $3.75 of a possible cash discount, we just take $3. So the total payment that we make is $774. Yeah? And we pay this by means of an electronic payment. But also here, let's quickly post that because we don't need to generate the payment. We just want to see the outcome. And now to analyze this kind of payment, we have created an electronic report that is available. Oh, let me switch the session, because here we prepared it. That is making use of the very basic information that I want to analyze. So let's first have a look at the model. And the model contains the data that I want to extract and then dig into. So I have here some information about the vendor, something like the vendor ID, vendor name. Then if I scroll down further, I want to see invoice data. So I want to see the settle amount. I want to see any kind of cash discount, any kind of foreign exchange gain or loss that we took. And then we have here at the bottom the invoice lines where I want to see ledger dimensions. And finally, if we have a purchase order, I also want to see the items. So that's all what we included in this model. And the next thing is then to find the data source to extract the data. And the data sources, they are actually quite easy. So we have here, if you look at that, we use general journal account entry, we use general journal entry, Ventrans and Ventrans payments. Of course, we do some data calculation and transformations where we group data in different ways. That's a bit complex, and I will not dig into that because that will take too much time. But let us have a look at the outcome. So if we run the report, I have two report versions, and both of them will give us the data in Excel. So let us first run this report, which basically extracts the data here for a selected period of time. And in a second, we should see how this report looks like. So it's small, but let's keep it like that, because it gives us a summary, a high-level summary of the data. And let us highlight the invoice that I just paid. So that's the invoice for $774. If I scroll to the right, and if I continue highlighting things, then you can see, oh, okay, hey, we took a cash discount of $3 while we could actually take 3.75. That's interesting to know. If we scroll further to the right, you can see who approved it. So the one who is responsible is actually Julia. And here closed means the transaction is fully settled. Sometimes you have partial payments where you do not settle transactions fully. And then there would be a different icon here. But then look at this. Now you are at a point where we can analyze actually the individual transactions. So if I highlight this one here, you can see the ledger accounts, you can see the amounts that are paid, and so on. And if you have items, and that's what I have done here for my first example, then you can even see the items. But, well, you might say, okay, this is a nice report, but it's not really nice to analyze and not usable for reporting. That's true. But because of that, we created another report design, which is based on the same model and model mapping. And that's this one here. So the only difference is that the output looks a bit different. So let me quickly run that. And then have a look at the next report. So the data here is the same. The main difference is that I do not have 4 separate tables, but I included and bunched the data in one big table. And this allows me to do the following. I can then create a pivot chart similar to what Ievgen showed you. And if I refresh the data here, then you can see 3 sections. I have an operating, a financing, and investment section. And that's actually what I wanted to know. That's exactly the structure that I need for my direct cash flow statement. And now I have here a grouping of the main account categories. So I can see here I spent something for inventory. I have here some manufacturing expense. I have here some property, plant, and equipment. And if I want, then I can slice and dice the data, for example, by vendor ID. So I can see who are the vendors that sent me the invoices and that I made payments to. Or you can say, hey, give me the invoice ID. What invoices have I paid? Or who actually approved the whole stuff? So in my case, Julia, Larsen, and Terence. And of course, if you click on the amounts, then you can drill down into the individual transactions and see all the data that we just analyzed. So with a little bit of electronic reporting, you can really pimp up your cash flow analysis and reporting that you have available in Standard Dynamics. So let me go back to our PowerPoint and then move on to our third and last part that we have. And the third and last part is related to non-cash flow related depreciation expenses. And the reason for that is after you spend your money, for example, for different kind of things. Maybe you bought a car, maybe a truck or a computer that works more or less. Yeah. Then finance people always want to know, hey, what happens to my profit and loss statement? How can I see, what is the depreciation and the cost that I will have in the next couple of months? And to do that, you see the picture of the three famous guys. What finance people often do is we create a depreciation forecast. Yeah, so we just create a journal, run the forecast, export the things to Excel, analyze the data, and then we delete the whole stuff again. Well, that's not very smart, but the reason for doing that is because we do not have a standard report. And also here, I ask Yevgen, hey Yevgen, I need some help because that's a big shit. Help me with that. And yeah, now let's move over and just show me what you found.
Yep. Would love to get me share my screen. It didn't stop sharing, probably.
Yeah, now I stop.
Awesome. So what Ludwig told me that there is actually a form in Inferno where you can see the data he needs. So here on my screen you can see as a table we have involved the capture actor here, and if we go to books itself, you can see a profile for each book. And here you have all the data you need. You can actually see your net book value, your depreciation dates, and then obviously by the end of life, your net book value would be 0 and your expenses would be accumulated value would be whatever amount is here. So you can get all the data you want from this screen. Unfortunately, it's actually calculated data, so you cannot simply build a report over it because you don't have data in the system. And let's look at the fields and figure out where they're coming from. For that, you can use personalization, standard feature, and as you can see here, it's using temporary table. So whenever you open the form, IX or Inferno does calculation, populates temporary table with all the data we need, and then when you close it, data disappears because it's temporary. So you cannot simply just add several tables to your report and get this data. But there is a solution, and it's electronic reporting, and it supports temporary tables as well. So let's look at the report that we have. First of all, model. Model would be similar to what we had for the cash flow forecast, just simple list. Record list, and all the fields that we are interested, like value, date, price, asset ID, asset name, book, depreciation, and so on and so forth. Very simple list. Now we look at the mapping, where main complexity lies here. So first of all, we need asset table. Yep. And when we edit, we can actually say that to show select criteria. So users can go, or you can go and filter it by asset you're interested in. And second thing that we need to add is actually join. So what happens if you look at the asset itself? It allows you to add tables from the relationship by a relationship defined in a code behind. So here you have asset book. So you can join asset book and get values for the book. But if you expand a book itself, there is a method provided by Microsoft called get asset profile. And this method actually returns a temporary table that holds all the calculations. To make this method available, you actually need to write some code. That's a standard code provided by Microsoft. So in our example, we were just lucky. There is a method defined by Microsoft. You don't need to write anything. You can just use it in your reports to get data, and I will show you how to do it. But what is important about it, it is marked with a specific attribute, ER table name, that allows you to return temporary table pre-populated with sub-calculations. So that's how standard one looks like. Now going back to the mapping, so what I have here, I know that from asset table, I can get to asset book. From asset book, I have this method that returns me container, data container list. That's actually a temporary table records connected to actual book. So what I have here, I created a new variable. And what I did a join of asset table to asset book, and then join them to the container. Because that container or temporary method returns you a list of records. Yep. And now I'm using this as a data source, and here I have a simple mapping. Because that temporary table has all the values, I just map them to the table, like to the total, to acquisition date, acquisition price, and so on and so forth. Here I have the similar challenge with enum, because I need to show nice labels, but here I'm using different solutions that is not as smart as the previous one. You can simply, if you know what you want to show, you can simply use a case formula. See, it's a quite big case, but then you say, and if it's reducing balance 125, you can put 125 reducing balance text message instead, and it gives you an opportunity to actually show to users anything you want instead of standard labels, if it will make more sense for them. Okay, so that's our mapping. Let's go look at the design. Design of the Excel report would be similar to what I showed before and pretty straightforward. Just set of fields. Each of them is bookmarked. You can see it here, and then you will have one big bookmark for the line, so electronic reporting knows how to print another line. Yep. Nothing special here. And now let's run the report. So here you have a filter, so you can filter what asset you want. Here I select my truck that I showed you before. It actually takes some time, probably 30 seconds, because it does all the calculations behind, but usually electronic reporting are really fast. So what we have here, yeah, we can embed a filter in our Excel spreadsheet. So here we can go and filter it one by one book that we are interested in, for example, FED. And then we have fixed asset name, fixed ID, name, book, acquisition date. We have depreciation method, service life, period, and the most important one is net book value and accumulated value. And we can see when our net book value and accumulated value will go like to the zero and the full amount when it will run out of service. And that's it.
Yeah, hey, that's actually what I was looking for, because we don't have a standard report available for that. But it's really a good and great solution. So
it is.
Yeah, let me try to share my screen again and to wrap up what we were talking about. And so you should see my screen now.
Yep. All good.
Yep. Okay. So the solution to the last cash flow depreciation forecast problem was also actually an electronic report, and you just saw how easy that can be built without any coding. Yeah. Okay, so at the end, if we wrap it up, we showed you three different things and problems in Dynamics, basically. So first of all, the cash flow forecast. There's actually a Power BI report available for that. But if you do not have this Power BI installed, then you cannot use it. And in many machines where you do some testing, you don't probably have this installed, so you need a workaround. And Yevgen showed you how you can easily do this cash flow forecasting with electronic reporting. And then again, the same thing if we look backwards. Our second demo case was just focusing on what did we pay? Who was the approver of our expenses? Did we buy some fixed assets? Did we spend money and distributed dividends to our shareholders? All of these things is there in Dynamics. It's tracked, and with electronic reporting, you can create even a direct cash flow statement, which is one of the most difficult things actually to do, and that the standard finance reports cannot do. And the last thing that Yevgen showed you is depreciation forecast. And that's one of the things that I hear most often when it comes to fixed assets accounting or finance in general, because many people just want to have a simple report that gives us the data exactly in the way as we see it if we click on the depreciation profile, but in a report form, so that we can use it for budgeting, for planning, that we can estimate what will be our profit and loss over the next couple of months. So that's what we wanted to share with you. Of course, if you have questions, we will be here to answer them, or you can also contact us later on. Let's see if we have a slide. Yeah. So Yevgen, do you want to say something quickly again?
Oh, yeah, you can always, here's my contact details. So if you have any questions regarding reports I showed, feel free just to drop me a line and I can help you with them.
Yeah. And the same, of course, for me. So if you have questions later on or want to come back to some of the things that we showed you, here are our contact details. Okay, so this brings us to the end of our short session here. We would like to thank you very much for your attention, of course. But before we close, I would like to make a feedback loop to what we shared you at the beginning. We thought and focused on so much cash and money and all of these business things. This is of course important, but just remember the most important things in life are those that cannot be paid by money. Okay, with that, I would like to thank you again and close it for today. Thank you.
Thank you, guys.